Hello everybody, we're here at the Traders Expo in Las Vegas. It's November 2019. I'm with Ed Modla. He's the Director of Retail Education at the Options Industry Council, and you know all about options.
I know a lot about them. I don't know about everything.
More than most.
I would like to think so.
So let's get down into the nitty-gritty of some of these things. There's something you have called that you like to use, a covered combo.
Yeah, this is one of the strategies that I presented here this week at Traders Expo. It's a really interesting strategy involving selling options. The covered call is one of the most popular strategies out there and has a reputation for being conservative.
That's conservative from the old days.
Yeah, and a lot of people will think of that as the most conservative strategy out there, and the way I teach the covered combo is there's actually a way to use it to be even more conservative than the covered call trade.
How's that?
Well, it depends on the size you're doing, and in my presentation today, I outlined possibly doing a covered call with 1,000 shares versus selling 10 call options, and compared that to this combination trade. The combination trade takes the covered call and adds a cash secured put to it.
Right.
So to make this comparison a little more direct, if instead of buying 1,000 shares and selling 10 calls, the investor bought 500 shares instead and sold 5 calls, and then sold an additional 5 out of the money puts, they're still selling 10 options.
So what's the benefit though? What do you get versus doing a regular covered call?
Well, you're still getting 10 options. You're maybe getting a little more premium because we know puts have a little bit higher implied volatility.
Sure.
The premiums may be elevated, so maybe a little more premium. You're also lowering your risk because instead of buying 1,000 shares at the current level, you're only buying 500.
And then you're getting 500 lower, arguably lower.
Arguably, potentially getting the other 500 at a lower price if you're assigned on the put, meaning your 1,000, your full size, won't actually happen until your cost basis is lower.
So the stock goes down a little bit.
It goes down a little bit if you're assigned your cost basis.
What's the downside? What's the risk? Is it a reduced risk situation with the covered call?
It's more risk with the covered call versus the covered combo the way I outlined it. Both strategies bullish in nature. The risk is to the downside. You own shares with the covered call. Covered combo, you still own shares. Maybe you own more. So downside risk is where you're at. The neutral environment is where you're profitable either way. You get that buffer by selling
a little bit lowered risk with the combo, right?
Yes.
And if the stock breaks down further, you're not as much. You don't get beat up as much.
You have a little bit of a buffer there because your capital expense will be lower than if you bought 1,000 shares outright.
But you're looking for that range sort of between the current price and the strike on the put is where you really is the sweet spot of this trade.
The sweet spot of the trade, the ideal spot for maximum profit is if the stock does rally and you get to pick up the share price. Shares rally, you own shares, you get called away on the short call side. That's maximum gain. But you're right. If you're right in that neutral environment, stock's not going anywhere, that premium is working for you on both sides. And some people would think that's ideal because then you can continue to sell more options.
And is this something that you guys teach people at the OIC?
We do. We teach this strategy among many others at the OIC. I gave you a presentation today.
And where's a great place for people to go online to find out about it?
So our website is www.optionseducation.org. That's where we have our strategies, our videos, our past webinars. We also got a great team of individuals who can help investors out at the Investor Services team. They can be reached by email at options@theocc.com. They'll answer your questions and direct you to what we have available online.
Excellent. Thank you, Ed.
Thanks, Jeff.
Thanks, everybody.